What up? What up? What up? What up? I'm gonna go over some stock things here. Got some questions posted to the chat, y'all. So let me go ahead and share my screen here, and we'll get to business. Discord Dimes is where everything is at here. So join up. I'll go ahead and post a link in the comments if y'all want to join. It's free. And then let me bring this over here as well. Boom, we in there. All right. So first couple of things I want to go over are the questions. Y'all can hop in the chat too. Fire away on any questions you got. Anything stock related, investments, crypto, March Madness going on right now, and we'll get it cracking. So a couple things. First question I had that was dropped before this YouTube here was how to get started investing, how to manage it. Quite frankly, it's like just the wanting to have your money grow. Doing some research, like for the record, if you have your money in your bank, let's say you got $1,000, how much are you making in interest in that? Pennies monthly? $1 a year? Maybe? It's not working. Think about inflation. Have things gotten cheaper? Have they gotten more expensive in your everyday life? They got more expensive, right? So you want to make your money grow. Keeping it in the bank account is not going to do that. So then just naturally you think, where does my mind go to? How can I make that money grow? A huge tool is if you guys ain't on X right now, hop onto Grok. This shit is literal cheat code. Type anything into it, it's gonna give you real time data. Like, how do I make my money grow? That's a great way to start. And it's just compounding knowledge, right? You type something in here, you don't know the answer, or you don't understand the things it's telling you. Research that, what you don't know. And you just do that day after day after day, it starts to again compound the knowledge. So that hopefully addresses a little bit of that. And then what amount do you start with? If you have any money in the market, it doesn't need to be thousands or tens of thousands, hundreds of thousands of dollars. You can have like $10, $50. And typically when you have money in the market, then you feel more interested, more inclined to pay attention. And then with time, just like how knowledge compounds and you start looking things up with time, understanding the flows of markets start to add up as well. And the thing about markets too, when it comes to trading stocks, trading crypto, you don't have to buy and sell every single day. Like you can literally just put money into it every paycheck, whether it be $5 a paycheck, 10% of your paycheck is what I tend to do. I'm not a financial advisor, just for the record, but it's nice to pay your future self. So start a goal, beginning of the year, could be right now in March. Write down the goal. I want to contribute $1,000 the rest of the year, the next 9 months. Come January 1st, 2026, I want to had contribute $1,000 over 9 months. It's about 110 bucks a month over the course of the next 9 months. That could be $50 a paycheck. If you want to do 10,000, just add a zero to that as well. So I don't think there's so much a right answer to how much to start with. I think the right answer is what can you afford to start with? So that could be different for everyone. But I do think that taking a couple bucks, whether it be that or more, out of each paycheck and putting it into something, whether it be Robinhood, you open up a Fidelity, your company has a 401k, those are all good things. And Will, you said here, how are you divvying up that 10%? Stocks, crypto, 401k, etc. Think about your personal risk profile. Everyone has a different risk tolerance. For myself, sheesh, I would say it's higher than most. I'm cool risking it to get the biscuit. And it also depends like age typically. Like people who are older, closer to retirement. That's why typically when they're with these large investors or just investors, people who are handling their money, they're gonna go probably more bond heavy than equities because it's less risky. So the older you are, typically you have a less risk profile, and the younger you are, typically more risky because you have more time to make it up. There's more time that you're going to have forward looking in the market to make up some of the potential risk that may have some drawdown. With that said, I personally max out the 401k every single year. I know some people are against the 401k. I know some people love the 401k. There's a lot of benefits. My advice, go on Grok, Chat GBT. What are some benefits to the 401k? But I like to max that out. Stocks, I got uh, a couple different accounts in stocks as well. So what I do to answer the question in full is I have a plan that I start with in the beginning of the year, and again, y'all can just do this now too, is how much do I want to save at the end of the year? And then I think that it could be good depending on risk tolerance. And again, not financial advice here, but okay, I want a lot of upside. Well, with a lot of upside typically comes a decent amount of downside. So that's a high risk thing, aka crypto, right? Stocks could be that way as well. Maybe not as volatile, depending on the stocks that you choose, is crypto and then 401k. So if you want a solid foundation, 401k, just some big blue chip stocks, your Tesla, your Apple, your Meta, your Nvidia. You can have those like larger part of your portfolio, Berkshire, CrowdStrike, things like this. So those aren't going to see your 10, 15, 20% moves up or down in a day. And then on top of that, then you can start to build in maybe some Bitcoin or some altcoins or some different stocks or equities that are going to have a lot more volatility, which means going up or down a bigger percentage on a day to day basis. Every time I make money, I'm investing personally about like 40% of everything I make and putting it into the markets in some capacity. I am going to take a solid chunk of that and invest in Bitcoin, dollar cost averaging on all these strategies too. I'm just not buying on green days, buying on red days. Typically, what I'm doing is going to be investing bi-weekly. So every 2 weeks when I get paid, I'm divvying it up 40%, typically on average. And chunk of that goes into the 401k, then crypto, then stocks. And it's a little bit of a different percentage on each makes up that 40%, but that's the strategy on that. All right, reading through a couple of other of these questions right now too. So another question is how much monitoring needs to go into it for someone like myself? Depends on what kind of investor you want to be. If you want to actively trade, or if you just want to passively trade, which is more put your money in the market, you're not buying and selling all the time. It's like Warren Buffett said, put a hedge fund manager up against just buying the S&P 500 and holding that for 2 years, 5 years, 10 years. There's like 95% of people are not going to beat the S&P 500. So you don't need to actively trade to have a very successful outcome. Something you can look up, Chat GBT, shout out that, shout out Grok is better on X. What does compounding interest mean? What does that look like over the S&P 500 over the last 5 years, 10 years, 20 years? If I were to invest $100 into SPY or Berkshire or QQQ, if I were to put $100 in a month based on the last 20 years of historical returns, what would that look like with compounding interest? And another thing is like you get dividends on a lot of these S&P 500 index funds, such as SPY. All right, another one I have here. It's a little bit more complicated of a question, but let's go ahead and address it. Okay, why does the value of a stock price go down although the company surpasses targets or expectations when announced on the earnings call? Zim, for example. So one more time. Why does the value of a stock go down although the company surpasses targets or expectations? So that's for these publicly traded companies that we're talking about here. Why would a stock price go down if the company beat earnings? Zim, for example. This is a little bit more unique of a stock on why that happened here. I'll give some breakdown, my thoughts on it. So, for example, if we're looking at Zim right here, Zim, this is a shipping company. So, if you look at earnings, right, they they did pretty well. Surprise of 33% to the upside on their earnings, 6% more than the estimate on the revenue side. Now, the reason why, actually, I'll start off with why they can go down is because stocks, equities in general, they're forward looking. So while they just beat the estimates on what this quarter's earning was going to be, maybe on this call, and typically during these earning calls, they're going to be talking about what their projections are going to be for the next quarter. Because as a publicly traded company, you have to report on earnings every quarter. So maybe, the market makers here were expecting the next quarter to be even bigger than this quarter that they just reported on. But if it's actually for some reason not as fruitful that what their projections are going to be for the next quarter, then it could take a hit for that amongst many, many reasons. Now, the reason I said why Zim is a little bit more unique than other companies is because Zim, you can see this D here. I'm on TradingView, by the way. This D means dividend. And there's a lot. I love buying dividend paying stocks, just for the record, because not only do you potentially get the upside of the stock going up, but you also get some money that they pay to the people who own the shares, as long as you own it by the ex dividend date. The reason why this is unique, though, is because they pay roughly, Zim pays about 30 to 40% on average, I believe, of their profit during these earning statements. And that means, let's say your profit is $100. $100 is what you made, profitability, and you're paying out 30% dividends. That means out of the $100, you're paying $30 back to all the shareholders. Now, that $30 that you're sending, you're not sending that to each shareholder. You're having that $30 divided up by all the shareholders, right? So let's say there's 10 shareholders, then each of them is going to get $3. Now, what happens when you pay out that money? Well, you have less money on hand. You're taking that out of your own company's pockets and paying it out. So one way to think about it is that's going to reduce the value of that company by that percentage. So that's a pretty basic explanation on why, one of the several contributing factors on why this could also take a fat drop. Right? It was at roughly 17 bucks, dropped to about 15. And usually that happens on the ex dividend date. Ex dividend date versus the actual payment date. Ex dividend date of a stock is when on record they're looking at who owns this stock, because those are the people who we're going to have to pay that dividend to. So for you to qualify for any dividend, not just them, it's like SPY on Berkshire, on some of these other companies that pay dividends as well. You have to own this stock by the X dividend date. And then you can actually sell it after the X dividend date, but then you'll get that payment on the actual payment date. So in this case, the 3rd of April. All right, what else? This is going to be a quick one, not 1,000 questions. Got about 10 in there, so it's nice. Couple things to look out for too. Let's see if I'm going to stop sharing this real quick, and then I'm going to share this screen. Boom, there we go. I would recommend getting this on some kind of tab that you save. This is the economic calendar. So when you're looking at certain days when the stock market is crazier than others, not all the time, but most time, it's tied to some kind of macro economic event, specifically in the US. For example, on this, you can see Tuesday the 25th, JPY, Japan, AUD, Aussie, Europe, Great Britain, USD. Okay, this is what we're looking at here. Like, what happened today in the US? FOMC member Williams speaks, right? New home sales. So typically on big events, on certain days, it's going to move the market a little bit more. And if you don't know what any of this means, again, hop on X, jump into Grok, type it out. What does X dividend date mean for stocks? Boom, knocks it out. And if you still don't know what that means, make it simpler for me. It'll break it down for you. This is a cheat code. And this is what I started doing. I'm not a finance background, anything like that. I just come from the background of I want to make money. And how do I do that? I don't know. So you just start doing research, whether it's 2 minutes a day, whether it's 2 minutes a week. Eventually, fast forward a couple weeks, couple years, it adds up. Then you start to know a little bit more and a little bit more. So there's a little cheat code right there. All right, what else we got? Do a little Bitcoin action right here. Make this simpler. Something I like to look at, 200-day moving average. There's a lot of different time frames that you can look at charts. I like to use the 1 week here. I'm not really doing a whole lot of day trading in this moment. Been pretty busy lately. Bitcoin for me, long-term play. Cody, what's good, brother? How do you identify, search for good dividend stocks? I think you kind of stumble upon them throughout time. It's like for me right now, Bitto is a big one for me. This one is hyper volatile just because there's certain dividend paying stocks like Berkshire, for example. You look at the stock price, $528 per share, right? And then let's go to the dividend. Let me see if it'll pop up here on the daily. There you go, SPY. It's a good example. So look at this. $175 is the actual price of this stock. And this is paid out quarterly, right? So you got one in December, you got one in March, go back a couple quarters, you got one in September, right? So it's paid out quarterly. Now you look at 169 over 575. So let's pull up this calculator right here. $1.69. So for every share that you own of SPY, which costs you $575, if you want to buy one share of SPY, which is the S&P 500, you divide that by 575, the share price, 0.002. So not even close to even a single percent, which is also why on this ex dividend date, you can see it's like not moving this price down just because it's such a small percentage of this. Then we jump to Bitto, and this is why I like this, bringing it full circle around your question here, Cody, is instead of quarterly, it's paid out monthly, which also does create a lot of different factors such as volatility. This is not nearly as liquid as your SPY is, but this is paid out monthly, you know? So the SPY was 0.002. Now, if you're looking at this dividend, 0.72, see if I can bust open this calculator again. 0.72, which means they're going to pay you out 72 cents per share that you have. And each share costs you $19. That's in this particular dividend cycle. We divide that by 21.91. It's going to pay you 3% per dividend right now. Now with Bitto, this is highly correlated with Bitcoin. So there was a couple different months where it got pretty crazy. It's like dollar, dollar 20, dollar 44 per share, dollar 50 per share, dollar 76 per share. This price is like $23 at this time. I like this because it's gonna pay you a pretty fat dividend, and where I think Bitcoin is going long term, not only am I making the dividend, but I also have high upside. That's why I like Bitto. More risky though. And to find like what are some of the best dividend paying stocks, that's where I would leverage Google. I know a few of these that I like to invest in. The easiest way to find this answer though, what are some of the best dividend paying stocks? And I don't think it's good just to blindly jump into some of these. It's nice to do a little bit of research on it. You know, Verizon, apparently we can go ahead and look at that. Chevron, and this is for high yields above 4% or dividend growth. Johnson Johnson, Home Depot, Caterpillar, Walmart, Reality. And it's also good not only to just look at what pays the most dividend, but is it in an industry or a sector that you like? Rising, telecommunications. What about Caterpillar? You know, the big old tractors that you see, construction. Do you like that industry? So REIT. I'd be curious if this is more commercially real estate focused or if it's some kind of like residential REIT, because commercial real estate sketchy right now. Performance of the stock still matters though, absolutely. Yeah, I'm a big proponent on getting a company I believe in because if you're getting paid out a dividend, but the stock is going down, you have to hold the actual stock to be paid out that dividend, at least on the ex dividend date. So ideally, if you can find a dividend paying stock that is also doing well, prime example is going to be QQQ or SPY. It's like, look at this. Let me go to the weekly chart. Now, this is not going to make you rich on these dividends, but over time, it's going to help you because you can reinvest dividends. You can choose to reinvest them, which means it's time for this dividend payout, and then it automatically goes back to buy more shares. Or you don't reinvest the dividends, and come that dividend time, it'll go ahead and hit your money market account typically. So this is like 23 cents right now when it's, $493 per share. Yeah, that's pretty small payout. But this was back when it was $92 a share. So that's where it's like buying, holding a lot of these stocks just long time, you're going to perform better than 90% of the 95% of the market realistically, just buying and holding a good company or good index fund over time. And I've reallocated a lot of my like 401k portfolio into dividend paying index funds for sure. Because once the money starts to stack up in some of these accounts, the dividend payouts goes a long way. You talk about compounding interest over time, goes a long way. All right, what else we got? What other questions here? Yes, sir. All right, I'll give a couple things I'm looking at too. There's some of the stocks that I currently hold here. Current holdings, ARKB is Bitcoin. Sure, you guys heard of Kathy Wood? There's like BlackRock, which is IBIT, Kathy Wood, so ARK shares. This is their Bitcoin ETF. So I got this when they kicked off. It was a big thing a while ago, but I think long term I like this. This gives you like Bitcoin exposure in maybe your stock or your 401k portfolio, more likely your IRA. ARK, Baba, good old Baba is down. It was up at 300 a while ago. I think Baba is good. It's nice to have some exposure to a company like that, in my opinion. Ditto, Berkshire B is just like you look at the performance over time. It's like it's crazy. Are these things going to drop? Of course. Like this looks great, but when you're in like this moment right here, where it just drops, 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 you think it's the end of the world. This goes down 30%. Zoom out though. You go to the grocery store and something you like is on sale. You gonna buy it? Yeah, for sure. You probably load up on it. But when it comes to stocks, people tend to shy away from that. They tend to start selling. A lot of times, especially something like Berkshire or other companies that you like, that was that drop right there. It's like it's a great time to buy, and there's some blood in the streets. Could there be specific better times to buy than others? Sure, but over time, that's where that dollar cost average really does you well. Kills a lot of the emotion, takes that out of the game. CrowdStrike, CVS, I was actually shorting this and got cooked. Crazy. Not a big CVS guy. Duolingo's, they've been doing pretty hot for sure. Robinhood, this was a crazy ride. They're onboarding a lot of people, a lot of the younger generation. Like you think how easy Robinhood is to use when investing. I'm sure half the people, if not all the people who are going to be watching or on right now, probably use Robinhood in some capacity. It's a super easy way to invest, especially for some of the young generation, the younger investors right now. And on top of that, they're trying to earn a lot of business from some of the older generation by paying them. I think it was like 1%, might have been 5%. Pretty sure it's like 1% for them to bring over their entire retirement portfolio. So they're not only just in these smaller markets, but now they allow futures trading, overnights trading, crypto. You can get on there, and now retirement funds you can actively manage in Robinhood. Long term, I like that a lot. MSTR, you guys heard about MicroStrategy, obviously. MSTY, Cody, to your question earlier, this is another one I just started buying like 2 days ago. I just got some exposure into MSTY here. They pay out monthly dividends, just for the record. This is 23 bucks per share, paying out 137 per. One easy math, 1 over 25%. Back to basics. Dabo was good. What are the best trading and investing platforms? Best, still like that's subjective a little bit. I think Robinhood is the easiest to use. I don't use Robinhood. I like to use Schwab, and I think Fidelity is probably my favorite. It's not as easy to use in my opinion, but you could literally call them and they'll walk you through everything. Customer service is A1. They'll hop on the phone with you right away. They'll walk you through things. They'll even break down stocks to you. They'll spend as much time as you need on the phone with them. So I like Fidelity. I personally use Fidelity and Schwab investing platforms, stock trading. Those are who I use. Robinhood, more than likely the easiest. All right. What else we got? I said this was gonna be like 5 minutes, 31 minutes deep. Loving it. What questions we got? For the record, I like equities, man. I like crypto. I don't know. I think tariffs is gonna be super interesting. April 2nd, just for the record. Trump is gonna be talking about tariffs quite heavily on that day. Really curious to see how the market reacts. I like equities though, long term. CPI, PPI data looking good. Inflation looks like it's coming down on paper a little bit. Jerome Powell, Fed chair, is holding pretty firm on his 1 to 2 interest cuts this year. We'll see if Trump has a little bit of an effect on that. See if he can help maneuver and persuade the Fed, which is separate than the U.S. government. It's a private entity to change these interest rates. All right, y'all. Good session, man. If you guys have any questions, you can leave some comments or jump in Discord Dimes. We're running it up for the rest of March Madness. Off to a hell of a start. I think 8-2 right now, 8-3 maybe this last weekend. I think up like 38 units just this last weekend, and we don't even do basketball. It's just got to know how these kids act in college. Some of them get flustered. Big, big, big games coming up on Thursday, Friday, and Saturday. Join Discord Dimes. All right, y'all. Appreciate you.